What is up, guys? Joe here, back with another video. Today I wanted to cover Robinhood, which is up a whopping 50%. Robinhood recently just IPO'd exactly a week ago. It has more than doubled its stock price. Today I wanted to take a look at some technical analysis happening within Robinhood. So let's dive in. You're probably wondering, why is Robinhood up so much today? And there is no real headlines regarding the stock. The only headline I could find was Wall Street bets on Reddit is pumping the stock, and also today is the day the options chain for Robinhood was made available to the public. So let's take a look at Robinhood within TradingView. Here we have a 5-minute chart on Robinhood. So today at the opening bell, we did have a giant push from the $54 price up to the $85 price, and it came back down slowly, and it has a small run upward throughout the day, and it just ended at the $70 mark at the closing bell. So from here I did want to make some price predictions for Robinhood going forward, and because the stock has only been trading for a week, please use these Fibonacci levels in conjunction with other indicators such as the RSI or your squeeze momentum, which is similar to a MACD. That way you can make an informed decision when you choose to trade Robinhood. So you're probably wondering, what are Fibonacci retracement levels? Fibonacci retracement levels are horizontal lines that indicate where support and resistance are likely to occur. They are based on the Fibonacci numbers. Each level is associated with a percentage. The percentage is how much of a prior move the price has retraced. The Fibonacci retracement levels are 23.6%, 38.2%, 61.8%, and 78.6%. While not officially a Fibonacci ratio, 50% is also used. The indicator is useful because it can be drawn between any two significant price points, such as a high and a low. The indicator will then create the levels between those 2 points. So how to calculate Fibonacci retracement levels? As discussed above, there's nothing to calculate when it comes to Fibonacci retracement levels. They are simply percentages of whatever price range is chosen. However, the origin of Fibonacci numbers is fascinating. They are based on something called the golden ratio. Start a sequence of numbers with 0 and 1, then keep adding the prior two numbers to get a number string like this: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, and so on. The Fibonacci retracement levels are all derived from this number string. So let's take a look at some actual Fibonacci retracement levels within TradingView. So within your toolbar, you want to right click in this section and make sure your Fib retracement tool is selected. You want to find the lowest point of a candlestick to the highest point of the stock price. So this appears to be the low point. We're going to click once. It's going to create an anchor. Now drag this out and make sure your anchor here selects the topmost part of the wick that's here. And just to make it easier visually, we're gonna extend this to the right just a tad, and I'm going to go ahead and anchor it right there, and that looks about right. And you can always confirm with your stock price to the right, and you can go ahead and click once and your second anchor is set. And here it'll give you the different ratios between the stock price of the Fibonacci ratio. Starting at this bottom, you have 0%, 23%, 38, 50%, 61, 78, 85 up here. We can minimize some of the chart, drag this inward. That was 78, and 100%, which is the $85.15 mark. And beyond that, above, we do get Fibonacci extensions, and that's where some of our price prediction comes in according to these ratios. So we did get a high point of 85, and moving forward we can potentially see the next channel, which is $98.33. And if it breaks that resistance, we could see 115 and 10 cents. So the way to trade Fibonacci ratios, again, the stock is going to want to bounce around a certain channel. The bottom half of the channel will act as support, while the top half will act as resistance. So if the stock price breaks through resistance upward, the stock price will then begin, in theory, to bounce in the next channel zone. So as you can see here, we were trading around the 50% retracement level. We broke that and we were trading above the 61% retracement level today, and we actually pushed through the 78% and we did hit the 100% mark. We fell sharply downward and we were bouncing around this 61% to 78% channel, and that's where we remain today. So the closing price was $70. The stock price is looking bullish, and if we zoom out, we look at the 30-minute chart, we do see momentum growing. Judging by the squeeze momentum indicator, we are getting a push higher, so I fully expect Robinhood to keep trading higher, and the next price target would be revisiting the 78% retracement, which is $74 price target. If it breaks that, we can push higher to back to the $85 price target, and beyond that we could potentially see after that $98 price target. So always analyze these different indicators in conjunction with one another so you can make an informed decision on when to buy Robinhood. So I hope you found this information helpful. If you have any questions, please leave a question in the comment section. I'll be happy to respond. Don't forget to like and subscribe. I'll see you on the next one.